Assalamualaikum warahmatullahi wabarakatuh. We are from a group consisting of I am Hanif Darmawan and Muhammad Fikri Khaikal, Anelka Nasution, Jamalul Insan, and Luthfi Sya'bani. This time we will discuss about the balance sheet and current asset. First, it will be discussed by Muhammad Fikri Khaikal. To Fikri, welcome.
Okay, thank you, Hanif. I'm menjelaskan balance sheet. Balance sheet is a financial statement that reports company assets, liabilities, and shareholder equity. The term balance sheet refers to a financial statement that report company's assets, liabilities, and shareholder equity at a specific point in a time. Balance sheets provide the basis of computing rates of return for investor and evaluating a company's capital structure. In short, the balance sheet is a financial statement that provides a snapshot of a company, owns and hours, as well as the amount invested by shareholders. Balance sheets can be used with other important financial statements to conduct fundamental analysis or calculating financial ratios.
Thanks to Fikri, who has discussed the balance sheet. And next will be discussed by Anelka Nasution. To Anelka, welcome.
Terima kasih Hanif. Components of a balance sheet. Asset. Account within which these segments are listed from top to bottom in order their liquidity. This is the easy which they can be converted into cash. They are dividend to current asset, which can be converted to cash in 1 year or less, and not current or long-term asset, which cannot. Liabilities. A liability is any money that a company owns to outside parents. Parties. From bill has to pay to suppliers to interest on both issued to creditors to rent, utilities and salaries. Current liabilities are due within 1 year and are listed in order of their due date. Long-term liabilities on the other hand are due at any point after 1 year. Shareholder equity. Shareholder equity is the money attributable to the owners of a business or the shareholder. It is also known as net asset, since it is equivalent to the total asset of a company minus its liabilities or the debit it owes to net shareholder. Use of balance sheet. The balance sheet is an essential to use by equities, investor and analysts, regulators, to understand the current financial health of a business. It is generally used alongside the two owners type of financial statement, the income statement and the cash flow statement.
Thanks to Anelka for discussing the component of balance sheet and use of balance sheet. Next, Luthfi Sya'bani will discuss future. Luthfi is welcome.
Thanks to Hanif, and I will tell about current assets. Current assets are all the assets of a company that are expected to be sold or used as a result of standard business operations over the next year. Current assets represents all the assets of a company that are expected to be conveniently sold, consumed, used, or exhaust through standard business operations within 1 year. Current assets appear on a company's balance sheet, one of the required financial statements that must be complete each year. Current assets will include cash, cash equivalents, account receivable, stock inventory, marketable security, prepaid liability, and other liquid assets. Current assets may also be called current accounts.
Thanks to Luthfi for this current asset. Next, we will discuss by Jamalul Insan. So Jamal is welcome.
Components of current asset. The first one is cash and cash equivalent. These are those items in the balance sheet that can be liquidated immediately. They account for the value of the company's assets, and this include bank accounts, commercial papers, treasury bills, and debt securities that contain a maturity that of 3 months or less. Second, account receivables. This constitutes the money that a firm owes from its customers for the goods and services delivered. The business expects to receive these amounts within 1 operational year. However, many times a business fails to recover its entire amount from the customers. This gets listed under bad debts of the company, and they don't come under the current assets. Third, inventory. The stocks include raw materials and finished products which a firm calculates in the assets segment. However, there are other accounting methods that a business adopts to ascertain the inventory, such as LIFO, last in, first out, and FIFO, first in, first out. Fourth, prepaid expenses. This includes the cost that a company pays in advance to receive the goods and services in future. A business cannot convert such current assets into cash. The future expenses comprise the insurance premium that a firm incurs in a financial year. Uses of current assets. The total current assets figure is of prime importance to the company management with regards to the daily operations of a business, as payments towards bills and loans become due at the end of each month. Management must be ready to spend the necessary cash. The dollar value represented by the total current assets figure reflects to the company's cash and liquidity position and allows management to prepare for the necessary arrangements to continue business operations.
Thanks to Jamal, who has discussed the component of current asset and use of current asset. This is the end of the discussion this time. The conclusion is a balance sheet is financial statement that reports company asset, liabilities, and shareholder equity. Component of balance sheet are asset, liabilities, shareholder equity. The balance sheet is an essential tool used by executive, investor, analysts, and regulator to understand the current financial health of a business. Current assets are all the assets of a company that are expected to be sold or used as a result of standard business operation over the next year. Component of current asset are cash and cash equivalents, accounts receivable, inventory, prepaid expenses. The total current asset figure is of prime importance to the company management with regard to daily operation of a business. And then I am Hanif Darmawan as the moderator, and thank you. Assalamualaikum warahmatullahi wabarakatuh.